After learning the three business pillars in a typical full-service bank, let's look at where does the consumer lending fit in. Okay, so under the personal and the commercial banking division, there is a deposit and a loan services for individuals, right? So that's where consumer lending is sitting in. For individuals, people deposit money into their checking or savings account. That forms the deposit. From the deposit, then the bank can loan some of those out to credit-worthy consumers. So that's the consumer lending business. So the result of consumer lending will lead to some type of loans sitting on the bank's balance sheet, such as mortgage or credit card debt. These are considered assets because the bank earns interest and fees from these loans. So they generate revenue for the bank, so they are assets for the bank. On the other hand, the deposits for banks, these are considered liabilities because they need to pay interest to the consumers who make deposits. The consumers could withdraw money at any time, so there's a liability for bank to fulfill. So this is quite different from a consumer's perspective, right? Because your money, your deposit is your individual's asset, right? So if you borrow a loan, you need to pay it back. So the loan for consumer is a liability. So consumer lending sits within personal and commercial banking division.